for our next guest, discussing precious metals, sitting now at key resistance levels. So let's zone in on the bullion story that is. Will this, though, be a settled state for the next few weeks, you ask? Well, for all things in the round commodity-related, Markus Helsing from JB Markets, live in another part of our Melbourne studios. Markus, warm welcome into the show. Again, we can understand some of those catalysts for support are weakening off in those Fed expectations, so a weakening greenback alongside the elevated risk for a general election across the Atlantic.
Yeah, that's correct. Hi, Carson. Look, I think the greenback really is the most definite, the big macro story. US dollar on the basket on the dollar index looks extremely ordinary. If you look specifically against certain currencies, in particular the euro, the story has changed dramatically in our view over the last 2-3 months. And we believe this theme will stay with us probably for quite some time. Now, on top of that, of course, I mean, we just hear about Gary talking about the channel markets. I mean, the value quest out there. And, I mean, CSL going for that at $10, well, great. But, I mean, where is the real value out there in the big picture? There is less and less value out there in your traditional equity markets. However, in certain commodities, there's massive value in our view. I mean, the precious metals at these levels offer tremendous value. Gold stocks, I mean, they got hammered for quite some time. Many of them are still struggling. They should be looked at. We like the Silver Lakes, your more blue chips, your Newcrests and your overseas gold stocks. Again, I think after this sort of 6 months rally and 6 months sell-off the last 12 months, we think this gold sector and precious metal sector is coming. And it's supported not just really by political actions in Europe. I think the UK election will be one thing. I think the German election in September will be a lot more important. But really, to me, this is a US dollar story and also to some degree a story about where we are in world asset markets, from real estate to share markets. And I mean, now gold and silver looks awesomely cheap at these levels.
So you've used the pretty emotive and powerful descriptor of a major breakup to the upside, therefore, inside the next 2 to 4 weeks. What kind of levels are you targeting on both silver and gold?
Well, the key level in the likes of silver is $20, and in gold you're 13.20. That are sort of your, or even 13.50 levels. They sound like big levels, but really, once the market does get going, gold can move $50 or $80 in a matter of days. Silver can move $2 in a day. But look, in the moment we don't see yet any euphoria out there. We just see basically general underlying support. We might even fall back a little bit over the next few days if the stock market has another go up north, which is quite possible. Short term. We just think there's a finale building in many strong trends. We had now a massive bear market in precious metals, followed by a 6 months rally, 6 months sell-off last 12 months. We think that gold is ready for a major, new bull market. So, I mean, from that aspect, it's just setting itself up. You look from gold and silver, you look at other markets, even copper in a moment, it's holding up remarkably well when you think about China really is just chipping away. So, I mean, there's a lot of underlying support, and if you then look from the US dollar to the Aussie dollar, which is your commodity currency, well, the picture actually, again, looks, again, very positive.
So, but you are you're casting a positive hue on some of the industrial metals, and I guess you add nickel to that story as well. I'm noticing a call out that it could be indeed set to head up a rebound of 60% in a year. So if you want to be in on that story, that would perhaps be a seductive one to run with. But what about the iron ore piece?
Well, iron ore, I think that's now probably in a stabilization phase to some degree. And as I said a couple of weeks ago, this is really just a drift now, and it'll have to find itself. I mean, the problem we face is really who buys our iron ore, which is China. What money do they use to buy our iron ore with? Debt. So obviously at some point, your government-induced Chinese debt bubble will have limitations, no matter how big they are. Look, I think iron ore will settle in between $40 to $60 range. Broadly speaking, $45 to $55 a ton, and we're probably going to stay there for quite some time. I don't think iron ore, unfortunately, is going to be any good story for quite some time.
Yeah, and presumably, just to kind of segue to energy, you don't think that's going to be a good story for some time either, because we were eyeing some balance to the market by year end, were we not? And instead, we get a destruction of the Paris Accords by Trump, and with it, off to the races goes shale, defying OPEC.
Carsten is spot on. I mean, really, probably the French and the Europeans have something to say about it down the track. Don't forget the French parliamentary elections are also on this month. I think they're more important than the UK election in terms of Europe as a whole. But when it comes to the Paris Accord and all that, to me, the overall supply story in oil now has become too overbearing. You mentioned it. I mean, the whole Trump factor there is huge, and OPEC's compliance with the production cuts is always questionable at best of times, so that doesn't help. I think when you look at the price action in crude oil, even in natural gas as well, you've just seen a certain capitulation as of the last week or two, and the last few days in particular, and we actually fear this could go a bit further. I mean, if $42, $43 based on West Texas Intermediate crude oil prices breaks, then we could see some fireworks. So I'm not yet saying that might happen, but I think we're definitely heading lower in the short term. If 42, 43 holds, well, we shall see.
Well, indeed, it doesn't sound as if there's much to look forward to on that measure. This is finished, though, with your bull call in the soft space. So pick one that you'd say hasn't yet staged the rally that we've seen in rice, for instance, but could follow in its crosshairs.
Well, I think that's the exciting story. I mean, like, we're talking Paris Accord, we're talking about climate change. For God's sake, food security is normally only worth 1 year. I mean, how long can you store grain? I hear 1 or 2 or 3 years at best. So at the end of the day, we had a lot of good harvests, had a lot to do with a lot of productivity, a lot of fertilizer use, and we've come a long way. But really, if you look at the actual latest of the last few years, we've been very lucky globally, weather-wise. No matter what events happen, it hasn't really affected grain markets in a big negative way. These things go in cycles, and looking at the price levels and price behaviors, there's unbelievable value in the likes of wheat. We think that should be something looked at by any speculator going long wheat futures, and any investor should buy ETFs with wheat-specific criteria. We think the value there is just undoubtedly quite massive.
You've captured the zeitgeist, because this is the week where Theresa May said I suppose the worst thing she's done that she can remember in terms of the rebellious was to run through the fields of wheat and annoy the farmers. How about that? This is, well, it's just it's all a bit deflating, isn't it, to hear that? I mean, it's the worst thing that she's ever done, running through fields of wheat.
Well, you've got to do what you've got to do, I guess.
You've got to do what you've got to do. Exactly. Markus, thank you very much. We'll talk to you soon.
Thanks, Carsten.
She did have to struggle to lay claim to that particular vignette, but still she got there in the end.